What's this?
Yeah, they did confirm. Come on.
If I'm gonna overheat. I'm gonna overheat.
Talk about it later, but the follow-up question. Point A, like it seems I'm speaking for an extended period. But it'll flow. They're having a little practice session over there.
We don't get the chance.
The benefits of being the second session.
Exactly. Let me get it with them.
Oops. Did it unplug? What was it connected to? Once it will detach, yeah. Once it's stable, you should be fine.
We're about to start. Good morning and welcome to our World Investor Week Symposium. We are thrilled to have everyone here with us today, which we hope will figure to be a very informative and engaging session. And we hope that by the end of today's session that we leave you with some more knowledge, insightful of making smart investment decisions. I am, for those of you who don't know me, I am Doricia Thomas. I am with the Money Matters BVI team here at the Financial Services. Money Matters is the financial literacy program of the BVI Financial Services Commission. And we're here celebrating World Investor Week 2024. Joined with me today, I have two lovely ladies who are experts in the field of investment, which will be our first topic for today. I have on my right Miss Christina Cook, which joins us from the PMI group of companies. She has served as the investment management industry between Jamaica and the BVI for over 13 years. Her experience spans with private wealth management for retail and high net worth individuals as well as institutions, portfolio analysis for insurance linked funds, and pooled with segregated pension funds as well. In her current role, she conducts investment research across North American securities and determines investment strategies and asset allocation for private wealth clients. Ms. Cook holds a Bachelor of Science in Banking and Finance from the University of the West Indies, Mona, Jamaica campus, and is currently pursuing her CFA charter. On my left now, I have Ms. Joanna Vass, which from the VP Bank, which brings a unique depth of experience in banking and trading from the City of London, both the sell side as well as the buying side, where she was based for 10 years prior to moving to the BVI in 2006. In the BVI, she has gained experience in accounting, auditing, and consulting through her time with Deloitte, which is my former employer. Which she consolidated through her position as financial controller, fund director, and BVI trust companies as well. Joanna joined VP Bank in 2015, where she's been instrumental in building the investment business and has recently taken on the role of general manager, head of client business, covering all aspects of VP Bank's financing and investment business. These are my first panelists for today on the topic on investments. Now, as we begin, with everyone's desire to grow and elevate their wealth, which is why we're all here, most of you are here with us today, but not just thinking about for today, but also for long term. We know that investments have a great way, there's a great way and a good way of doing things. But some persons have no idea what's the right way or how to go about doing any investing. Can you tell us something about, for someone who's looking to be a smart investor on a small budget, what type of investments would be best or more favorable for them to consider?
Hi, good morning, everyone. So typically when we speak about investments, you'll hear about the traditional asset classes being stocks, bonds, real estate, commodities, and more popularly within that category would be gold. And these asset classes can be accessed through different strategies, different products. I do recommend that investors work with an investment advisor or manager who would be able to assess their risk tolerance and recommend suitable assets for their objectives. However, I am cognizant that not every investor may meet the thresholds that are set across service providers. And so for the self-directed investor, exchange-traded funds are an excellent way to gain exposure to the market with lower capital requirements. So an exchange-traded fund, ETFs, as we typically would be a single unit. So it's a single unit security that gives you exposure to a basket of other assets. And that basket can be concentrated in stocks only. It can be split across stocks and bonds or other assets, as well as you could have an ETF that gives you exposure to the S&P 500 only, for instance, or you may have specific sector ETFs or across broad themes like artificial intelligence, which is very popular now. So given the low capital requirements for those, it's quite accessible for every investor, irrespective of where they are on their investment journey. And so that universe is pretty expansive and would afford them the opportunity to gain reasonable market exposure with lower capital requirements.
So what about if you already have established with, would those same concepts or those same stocks, bonds trading be applicable?
So outside of the specific product, we believe a well structured investment portfolio can unlock significant value for the investor, irrespective of where they are on the wealth creation journey, and whether it be an institution or an individual. And so, yes, the ETFs could be utilized for an investor with more established capital base. However, the ability to take on risk then is directly related to the level of financial resources available. And so for that more well-established individual or investor, they would have greater scope in pursuing strategies that may bring higher levels of risk. PMI, as an investment manager, for instance, would be able to purchase their assets directly as opposed to being constrained to certain types of assets. And so they could also pursue more complex strategies. But ultimately, irrespective of the product, how the product or assets are used will boil down to what the overall risk tolerance of the investor is and what their overall goal is.
Okay. I know some persons, I've heard different people ask me this question before as to whether their nationality, as to whether they need to be a US citizen, plays any role in being able to invest in these types of investment.
So that's an interesting question. I think we could take it from two aspects. And so, from a regulatory or compliance perspective, the clients or prospective investors' nationality or language could have some bearing on the service provider's willingness or ability to onboard that client. And so those factors would arise as part of the KYC AML considerations in the onboarding process. Um, on the front of language, so like at PMI, no, we currently have bilingual persons on staff. And so that has enabled us to have broader scope then to communicate with our clients and potential investors. And so I would say for the on the factors of nationality and language, provided there are no compliance or regulatory restrictions, as well as provided the investor is able to communicate with the service provider, then yes, the options are available to them irrespective of those factors.
I know most persons too, when they think of investing stocks, we always think, or we know that there are risks involved. Do you care to share some insights? Okay, well, what type of risks are there out there? What things persons should consider?
So all investments, irrespective of how it's marketed, will bear some level of risk. And so the investor has to take some responsibility in investigating, getting their knowledge up to par to understand the various risks as well. So let's say for a stock investor, you are participating in the shares, in the profits and losses associated with a particular company. And so your holding in that company is going to fluctuate as that company is impacted by different market cycle factors, company specific risks, or just overall market systematic risk. And so, even for a bond investor, and bonds would be considered safer than stocks, there's still interest rate sensitivity, as well as depending on the classification of the issuer of that bond, you would be exposed to different levels of credit risk. And so this is where diversification becomes important, and an investor's level of volatility, portfolio volatility, could be reduced by holding assets whose returns are don't carry high correlation in that they behave in different way based on what factors may be driving the market at a particular point in time. So the risks are there. However, I like to tell my clients the presence of risk shouldn't exclude us from participating in financial markets. It just means the risk has to be managed. And that's where an investment manager could become quite useful, because when the market is doing well, it's very easy to maybe go on to Yahoo Finance and just pick a stock and it's winning. But when there are downturns in the market, that's when you really need that guidance as to how to navigate turbulent times.
What would you perhaps say to persons when, like you said, you just try an inference where, okay, you go on Yahoo and you pick a stock and it's good, but on times when it's down, should they panic? What particular advice would you say to persons who may not know, okay, when it's down, should I pull out? What should I do?
Right. I don't recommend panicking. It's very important to have a strategy in place. And again, that's where an investment manager or advisor could become very useful because they are able to basically um, block out the noise that may be happening and identify whether or not this is a strategy that we need to stick to or whether or not we need to change based on what's happening now. But things will be, markets do become turbulent. So now, for instance, we have geopolitical risks playing out with the Israel war that's at play, which is impacting markets. But what is your timeline? Are you looking to invest for just a year or 5 years or 10 years? And so that will be a factor in determining, do you stay the course or do you need to adjust? And we do not recommend investing for very short periods of times because then you get into speculative investing, which can result in substantial losses.
Okay. Now, I posed a question on a small budget for persons on a small budget with Christine. And now, Joanne, I'm going to ask for persons who have quite a lot of money and they have quite a lot of wealth in their pockets, family inheritance, etc. What type of investments would you consider should be favorable for those type of persons who are well acidified, have lots of capital?
Good morning. Yeah, it's a good question. And I think our approach is, first of all, go and see an investment manager. There's lots of things to consider. Christina already touched upon it. It's very important to go through the profile of the investor. What are the requirements for that investor? Are you a long-term investor? Do you have excess capital? Do you have requirements in the future that you need to have spare capital for school fees, etc., or retirement purpose? So there are questions that we need to ask initially, and also to try and define the risk tolerance of an individual. You touched on if something was to happen in the markets. How do you feel if your portfolio lost 25%? We have to ask those questions because they're real questions. If you're devastated and you couldn't handle that loss, then we have to change the type of investment profile for you, make it a lot more conservative. Conservative would mean more bonds, less equities, for example. So those are the initial considerations for investing. Then once we've defined a profile, then we would look at the allocation. And of course, for us, diversification is key. And Christine's already touched upon that. So whether you invest in bonds and equities, you've also got other products, ETFs, good way to diversify, commodities, precious metals, and so forth. We look at time frame. How long are you willing to invest for? So a shorter time frame, then we're looking at more a bond portfolio. A longer time frame, we would look at equities. We can take on a greater risk profile in that situation. We would recommend also that you do have an advisor. It takes away the stress from you. If you are having to actively monitor your own investments, there's a lot of stress, there's a lot of time that you have to take to research, monitor, understand, and react. So it's important to have somebody maybe just to talk to and discuss options, investment strategies with.
So one of the key things to note is that I've heard both of you say is to have someone who is more knowledgeable in investment, to have an investment manager, help you on with your investment portfolios. And as well as to the fact that don't be too concerned with the short-term return, knowing whether or not you're in it for a long period of time to know whether or not you can monitor your stocks, grow your stocks, and not particularly look for immediate returns in hindsight. Um, as persons are, we all know some persons are investing. We all want to invest, whether it's to improve a standard of living, whether it's to or investing for children's future, or even if it's a situation where we're trying to plan for retirement as we get older. However, we know that there may be some things, some good or some bad. So while I was mentioning just about some of the key points in your brief conversation, what can you tell the audience, Christina, about some of the benefits of investing?
Benefits of investing. All right. So
As far as planning for the future, basically.
for retirement.
Yes.
Okay. All right. So typically, when we speak to persons, they may indicate that their idea of replacing their income in retirement is limited to just a social security benefit. However, income replacement in retirement is really should be coming from three sources, that being your social security benefit, an employer's pension plan, as well as your private investments. And so, in the absence of any component, it means that the others would have to compensate for that missing component. So, for someone who may not be able to access a social security benefit, or may not have a benefit from an employer's pension plan, they would be heavily reliant on their private investments to replace income during retirement and to maintain that quality of life. And that may be okay, provided the person has amassed significant wealth throughout their earning years. However, in our role as a pension manager and administrator, that tends to not be the case. And the average citizen would need to have those three components in place to really guarantee financial security in retirement. And so individuals have to take some level of responsibility or accountability in maintaining that private investment aspect to ensure that that income replacement is there at retirement.
So they have to have those three particular factors.
Those three pillars work best in replacing income at retirement.
So that they're financially sustainable when they
Right.
retire. Okay. Now that we talk a little bit about sustainability, now there's something that on the topic of that we're planning for our futures, and we all can see that there are certain things that are being impacted in which we behave our habits now. And sustainable financing is one thing that we also have to think of, not just about our own pockets, but also for the social economic benefits of how we invest. Now, I'm going to lean on Joanna to tell us a bit more about as far as how is it important in deciding where you put your money as far as thinking of the social and economic factors of your investments?
Yeah, I mean, and just taking a step back from that, why has this even evolved? And really stems from the UN and having these sustainable goals that they developed in 2015. And so around that, a framework has developed called ESG. So it's environmental, social, and governance framework, which we then sort of hang our research on when looking at companies. So not everybody does it at VP Bank. This is something that we've developed a sustainable score system. And you can look at these systems yourself. You can do your own research. MSCI has a website, and we actually use their data. And it really analyzes the way that companies act in the real world. You know, are they a responsible company in far as the environment is concerned? Or are they big polluters? Are they responsible as far as the social situation is concerned? Do they look after their labor force and their staff? Are they good members of the community? And the third aspect, governance, do they actually run their companies in a good governance way. They're compliant, they follow regulatory rules. And so all of these three factors really get put together, and you can then decide if you want to invest in such a company. Does it suit your own investment perspective and requirements? And I would say on a personal basis, I would rather the companies that I invest in are good citizens, responsible, have good governance. Over the long term, it's been proven that that is a value add for a stock growth of a company. There is genuine value creation for being a good company. And so this has become something that is obviously very popular at the moment and has attracted an amount of criticism. Greenwashing would be one example. But effectively, if over time everybody forces companies to be better citizens overall, then that has momentum in itself. And I think that is the way forward for investing.
I totally agree. Particularly being very avid to the green perspective and being corporate citizen as far as businesses as well as individual. We all see where many supermarkets are kind of steering you away from the plastic bags. It's a way of being, they as themselves as being more corporate responsible of trying to work on the environmental factors of the world. So when you think about investing now, you, as Joanna mentioned, you think about companies that are pushing that motto forward. And we all are seeing some of the great bad effects of global warming. And we also have to, you have to also consider, okay, are we going to place my money where this company is polluting the environment? Am I going to place my money in this company that is contributing to ammunition, building guns, etc.? So when you're thinking about your money too, when you're doing your research on your particular investment, also think about those things too when you do your research on the companies. Okay, what is this company doing? How are they contributing to the world I lived in? So those are a great point that Joanna made, I'm sorry, on making sure that when you do invest, do your research and be conscious too of the sustainability aspect of the companies in which you invest. Now, I know both of these young ladies have said quite a bit. Maybe there may be some terms you may not have understood, or if there's something more that you may want to know. So I'm going to open the floor now for any questions that anyone may have on this particular topic before we take a break into our break period. I guess everyone does it. Okay. Before, I know some people are sometimes camera shy. Before we do take the question and answer, Christina said she still wants to make Joanna.
We're interchangeable.
Yes. Joanna just reminded me that she wants to make to give you a bit more information on the last topic she talked about.
Yeah, I just wanted to highlight how it is better to be invested than not invested. Christina's already enlightened us with that aspect, especially for retirement, but just in general for you now thinking about the future. So we did, BP Bank, our Chief Investment Officer, Felix Brill, did some analysis over the S&P over the last 30 years. You would have made, if you had bought the S&P 30 years ago, you'd have made 785%. However, if you thought that you could judge the market and pop in and out as and when because you know best, if you'd have missed just 5 of the days when the market had a good rise, you would have actually halved the ability to make the money. So you would have made 459% rather than 785%. That's just missing out on 5 days out of 6,000 days, trading days. So it just highlights the point that it's better to be invested and not try to time and judge the market yourself.
Okay.
Keep in for the long term.
For the long haul, basically. because just missing 5 days out of 600 or
6,000,
6,000
yeah.
6,000 days, you missed out on more or less half of what you could have gained for that period, just in 5 days. So as sometimes they say the race is not for the swift.
Yeah, for sure.
Exactly. So do consider that thoughtful or that insight that she's just given from some research that they've taken. Now we're going to open the floor again for any questions before we take a break, if there is any questions. Oh, she's going to bring the mic to you so that you don't have to shout and so that everyone can hear you as well.
Good morning, everybody.
Good morning.
I just want, well, not a question per se, but would you be able to enlighten us about employee shares?
Employee shares?
Yes.
So typically a company could choose to, a company that's listed on a recognized exchange could choose to offer the employee shares in the company as part of their incentive package. I'm not very familiar with it on a private basis. Typically it's companies that where the stocks trade. What they would do is offer maybe a set number of shares annually to employees at possibly a reduced, lower than market cost, and that forms part of the compensation package for employees, as well as it may be offered to senior execs as a part of their compensation package as well. And the primary benefit of that is you have ownership in the company that you're contributing to, and it helps with it basically helps employees to feel invested in the growth of the company.
Thank you.
Donna, you want to add anything?
No, I think that's got it all.
Any other question?
It sounds like everyone seems to be pros, or they've captured in much information that they need. I know I've heard them say not a lot of acronyms. Is everyone familiar with the acronyms that being used? Was the information relatable, understandable? I would say so. Okay, we will take a quick break before we continue into the next session. There are some eats on the outside. If you need to take the restroom, feel free to do the same as well. Yeah, it's right. Once I
Yes, yes. So Carlton, tell me.
Yes. You can hear me?
I could hear you.
All right. Very good.
Testing, testing.
Yeah, I can hear. Yeah, read it later.
Again, just say testing.
Just
Yeah, good morning, one and all. Pull up. Louder. Okay. All right.
Pleasant good morning, and we're now going to start part 2 of today's symposium, which is on the topic of financial fraud. Joined with me on my panel, I have Mr. Vernon LaRocque. He is with the BVI Financial Investigation Agency. He has been a police officer at the Royal Virgin Islands Police Force for the past 24 years. 20 of those years he spent as a detective within the crime division of the organization, dealing with matters such as petty theft and managing major homicide investigations throughout the territory. He rose from the rank of constable to acting detective chief inspector within those years. In April of 2024, he resigned from the police force and accepted the position as the senior investigating officer and analyst at the Analyst and Investigation Unit of the Financial Investigation Agency. Also from the agency, we also have Ms. Kenisha Benjamin. She is the Virtual Assets Analyst at the agency. She primarily deals with the virtual assets related to SARS. However, if need arises, she deals with cybercrime related SARS due to her academic background in computer forensic. You're a forensics girl. Kenisha is a certified cryptocurrency auditor and a certified information system analyst as well. We also have on my far left, Mr. Carlton O'Neill. Mr. Carlton O'Neill is with me here at the BVI Financial Services Commission, and he joined the commission in 2018. He has worked in the insurance agency for over 20 years. Some of the positions which he's held in the industry includes being a sales manager, medical insurance manager, life insurance manager, claims administrator. He is the former general manager of Colonial Insurance, which is now known as CG Insurance, BVI Limited. Mr. O'Neill has completed training in the insurance operations, pensions administration, as risk management, both regionally and internationally. He currently serves as our Prudential Conduct Manager at the Market Conduct Supervision Unit at the BVI Financial Services Commission. These are our panelists today on our topic for financial fraud. Now, earlier we discussed on the investing, where it's a great way to increase one's wealth through investing. However, there's also associated risks and there's also associated fraud. And we all know that the prevalence of frauds in the territory as well as worldwide is on a high incline. And it's something that doesn't seem as though it's going to stop, and it's growing like a weed. So I think no more fitting for World Investors Week that we speak a bit about the financial frauds that are out there. Now, Vernon, in your line of work, what can you tell us about some of these get-rich schemes and scams that are out there?
All right, good morning, one and all. I want to thank the organizers of this symposium for the opportunity to speak to you this morning in this forum. I just want to say first and foremost, the Financial Investigation Agency, we don't investigate scams and fraud, especially those pertaining to this, investment scams and fraud, but we also have a responsibility. And just to give everyone an idea as to what we do, because you've heard from the introduction, most of my tenure I spent as a police officer, so I have a good understanding on that aspect. And regarding these types of investigations, fraud or scam investigation, you'll hear us use the word interchangeably between fraud and scam because they're almost alike and same. I have some written material I've prepared, so I'll just go through. I'm not going to just read from it. I'll try to explain and maintain eye contact. Yes. All right. You may hear the word scams and fraud, as I said, being used interchangeably. They are similar but different. A scam, according to the Merriam-Webster dictionary, is a fraudulent or deceptive act or operation. Fraud is an umbrella term for any deliberate deception used for financial or personal gain and encompasses many different types of attacks. Scams are a type of fraud where criminal uses schemes or tricks to con someone out of their money for personal gain. Fraud example, using a stolen credit card to buy high-priced goods. Another example of fraud, using someone else's insurance card to receive medical care. Scam example, using a phishing email to convince someone they owe taxes or are due a refund as a front to collect personal or financial information. If a consumer account is taken away and the fraudsters make payment, this is fraud. However, if the consumer is tricked into sending money under false pretenses, this is a scam. Both fraud and scam can be identified with offenses under the criminal code of the Virgin Islands, specifically those that align with theft, because most fraud or scams involve dishonestly appropriating property belonging to another. And I'll just give a couple sections for your benefit of the criminal code. Section 203 of the British Virgin Islands Criminal Code states a person is guilty of theft if he dishonestly appropriates property belonging to another with the intention of permanently depriving the other of it, and thief and steal shall be construed accordingly. It is immaterial whether the appropriation is made with a view to gain or is made for the thief's own benefit. Property, as explained in the criminal code, includes money, defined whether in the form of cash, checks, credit card, bank draft, money, or otherwise, and all other property, real or personal, including things in action and other intangible property. In the case of credit card, the interest or number comprising the card shall constitute property. And then there are other sections that speaks about obtaining property by deception. Although I said in the beginning of the conversation that we do not investigate scams and fraud, we do have a responsibility under our functions as the FIA, specifically section 4F and 4I. And 4F said that may, subject to this act and to such condition as may be determined by the director, provide information to the Commissioner of Police where the information may relate to the commission of a financial offense, may provide information relating to the commission of a criminal investigation, including a financial offense. And I shall inform the public and financial and business entities of their obligation on the measure that have been or might be taken to detect, prevent, and deter the commission of financial offense. Basically, what that's saying that we will behave in a supportive role on behalf of police investigation regarding scams and fraud. So if we get a request from the Commissioner of Police regarding a particular scam or fraud, because of the certain powers that we have under Section 4 of our Act, we could get that information on an intelligence basis on behalf of the police. And once they get that as an intelligence, that they could provide the entity or firm with a production order and receive evidence to support that investigation. The second section in I also speaks about we have an obligation to inform the public order. Basically, that's like outreach. So if there is a prevalence of, let's say, a specific Ponzi scheme or something of that nature, we have an obligation to let the public know this is out there and what measures they could take to protect themselves. So some common types of scams or frauds. There are several. If you scour on the internet, I actually did some research for this presentation, and there's so many. But I don't want to take your time to go through all of them. I'll just mention them, but specifically investment fraud, which is the whole purpose for this symposium. So there are what we call ticket scams and fraud. There's authorized push payment scams, which they call app fraud, impersonation scams. There are purchase scams, romance scams, loan fee scams, lost pet scams, parcel delivery scams, identity theft frauds, credit card frauds, medical identity theft, data breaches, which we see recently with our own BVIEC, where their information was or their data was breached. We do not know what the specifics are, but it seemed to be a very big breach. And there's ghost brokers. I mean, I have the definition and all, but I don't want to take up all the time. There's insurance fraud, charity fraud, pension fraud, and investment fraud, which we are here for. This is also a type of APP, or authorized push payment fraud. However, for the purpose of this symposium, I felt it necessary to deal with it separately. This is when criminals convince victims to invest with promises of high guaranteed returns. They might want you to invest money in stocks, bonds, notes, commodities, currency, real estate, and now with crypto especially, and I'll let Kenisha speak more about crypto, but it's something that we have realized that's coming in a lot into FIA, not really on a local scale, but more international. You know, they would make certain requests from us to make certain requests on their behalf to the local crypto, so forth entities. And I see where persons would basically, under scams, fraud, have individuals think they are investing into a legitimate crypto platform or so forth, and then walk away with the monies. And there's also certain examples of these types of investment fraud, such as Ponzi scheme. And then we in the BVI have, or some of us have suffered with that one, especially one called Zik Rewards some years back. A lot of people locally, I know a lot of police officers got trapped in this as well, where they invested in this and all of a sudden the platform crashed and a lot of people lost their monies. And I'll just let Kenisha speak a little bit about crypto for the purpose.
Good morning, everyone. So, as Larak would have mentioned, more and more persons are investing in cryptocurrencies, and we're seeing a prevalence of investment fraud within that space, particularly in the form of pig butchering and rug pulls. So, for pig butchering, for those of you that do not know, is a method used by fraudsters to essentially gain the trust of the would-be victim, right? And they would essentially get to the point where they build a rapport with this person. And once they've found that they've reached that level, they would then they would then speak on the concept of cryptocurrency investments. And they would promise them that they would have high returns, and eventually, once the persons invest, they would then steal all of their money. When it comes to rug pulls, for instance, the investment scheme behind all of this is that a new currency or a token would be developed, and they would basically hype up the development of this token. Eventually, what happens is once they reach their target value, they would eventually abandon the project, leaving the investors with worthless tokens.
So if I'm hearing both of you correctly, these type of scams can come in the form of whether it can be an email, it could be somewhere they receive a package, as whether you talked about the parcel, phishing. It could be a phishing email. It can be an app. It could be a text message. It can be in various formats. But how would a person particularly know that they've been flagged? What's the warning signs that you can share with with the audience as to how can you detect some of these things when you see them? Because the internet right now is filled with a lot of scams. You see a lot of ads that come up on your, if you're scrolling through you, whether you on one of your social media pages, and sometimes they look good, sometimes they are really scams, but sometimes you really don't know. Is there any particular flags or warning signs that you can share with the audience as to what can you look out for to detect this fact?
Okay. Some of the warning signs that you watch out for: unusual transaction. Regularly check if it's like a credit card fraud, check your credit card and bank statements. Keep an eye out for purchases you didn't make and charges you don't recognize. Keep tabs on your mail, not receiving mail you are expecting. This could be a sign that it's been rerouted to a fraudster. Make sure you take the time to check your posts. A lot of the research that I found is some of the scam types more affect bigger territories, you find the UK and then the US. So some of what we say may not necessarily apply to us, but it's good to have that information because we may travel, we may go to school, and then we may want to be aware as to what's out there. You have email confirmation for purchases you didn't make, or emails demanding payment for an account you didn't set up. There are credit cards arriving in posts you didn't apply for. Bills from company you've had no dealings with. Debt collection contacting you about bills you don't recognize. Being told that you've been approved or denied credit for an account you know nothing about. I think Karen, can you just help while I go through?
So additionally, there may be pressure to make a quick decision. Right? Additionally, they may be asking for upfront payments for prizes and gifts. There will be promise of investment returns. They may ask for access to your devices. And I think it's important to highlight that, especially for the elderly persons who may need assistance when it comes to investments. So essentially, they may steal your information and ask for payment for the release of said information. Additionally, there may be non-existent or poor customer service. So when you're looking to now when you're now looking to withdraw, your funds, there will not be any support for you to gain access to the funds that you've invested.
So what particularly advice would you give to someone, okay, if something looks suspicious, what precautions can they take in protecting themselves?
So if it looks suspicious, chances are it is, right? So it is important to do not give out any personal information. It's important to check the emails, check the text messages, ensure that it's coming from a legit person, from a legit company. It is important to do not click any suspicious links or attachments. It is important to verify persons' identities. Additionally, and most importantly, it is important to report it. Report it to your bank, report it to law enforcement.
In addition, as well, you may find you get what they call a cold call from someone, or sometimes individual may pose as family members in need of certain things. So you might get a WhatsApp from a family member that say, "Oh, I'm in a jam. I need X amount of monies," and I guess one of the red flags would be you receiving that message from an unknown number, and then you may ask the question why you call me on an unknown number. They might say, "Oh, I lost my phone and this is my new number and whatever." One thing that you could immediately do is call the old number for that individual to confirm. Because the thing is now, you get in this thing, and you find a lot of it as well, you know, with from Nigerian companies and so forth, sending you these things on your phone, telling you, oh, you win monies. You know, all you have to do is send me X and X amount of money, which I find always strange because, okay, I win all this money. Why don't you take from it and send me the rest?
Send you the rest,
You know?
exactly.
But you'll be surprised how many people that fall for that. You know, they would send monies in the hope of this grandparent that died you didn't know of, and all of a sudden they leave you this millions, and you need to send money to get money. So, you know, be careful of that. So, as I said, you contact the individual with a number you know. If it's from an organization like a bank or so forth, you contact the organization directly from a known number, you know. You access the organization's secure authenticated portal or app, never via a link. And I almost fell trapped to one like that, where my PayPal account was compromised. And I'm getting this email from PayPal saying, oh, you know, your account has been compromised and you need to take these measures immediately. And I go in forth, you know, what's your password? What's your this? And you know, it's almost on the last leg. I realized, but why would PayPal ask me all of this? Because they have, you know,
Information, exactly.
So then it hit me that I should probably go into PayPal on the regular method or medium and confirm, and then all my stuff was there. But then the haste, this is one of the red flags as well. The haste, they want you to do something immediately. And you were feeling like if I don't do anything, this is gonna happen. My card gonna be compromised, my money's gonna be wiped out. And just the fear factor, that's what the fraudsters use on individuals. And as Kenisha mentioned, the pig butchering, it sounds like a terrible thing, but I don't know if any one of you saw the movie Beekeeper, where you know this lady basically was managing a trust of that nature, and then she just got a phone call. Her computer started acting strange, and she called for assistance, and they said, okay, just enter this thing, and then she entered this stuff into her computer, and everything just wiped out, and they clean out. And people actually have this as a business. I think the area Myanmar was Myanmar, where they actually have big facilities set up just to target individuals. And you realize how your life, those of us that love social media, you know, we would realize that our lives are out there for anybody to steal and take. So there's one of the scams, sorry if I take it over, one of the scams called the pet scam, where individuals would, you know, in the States and these bigger countries where you lost a pet, you'd put it out on bulletin and what's not. So they'll take the same information that you furnished and say, hey, we found your pet, you know, and basically send that out to you that you provide X amount of monies in order for the return to pet. Anytime somebody's asking you for monies to return to return your pet, call the police, you know, so.
Reward, yes.
Mm-hmm. Yeah. Well, yeah, but I think, well, it is specific to the reward that you're offering. You know, I think that's not supposed to really raise any red flag, but then you still have to say, but where was that pet all them time? It's based on the time that they're now seeking the reward compared to, you know. So, you know, have to be cognizant and say, okay, probably I should even go and claim that pet with the police, you know, instead of going by myself.
So what in situations where, okay, you mentioned the red flags and things that they can look up for and some of the things that are out there. But what if you genuinely miss that red flag and it looked real legit and then you realize you've gotten caught in this particular scam now? Is there any recourse a person can take? Is there like a time frame for them to try and recover any of their losses? What can they do?
So
When it comes to recovering losses, it is important to act quickly, right? The quicker an investigation is launched and the person is identified, then there is a more likely possibility to recover those funds. But the success of the recovery is dependent upon the level of sophistication used by the fraudster, right? Because let's say, for instance, when we're talking about cryptocurrencies, fraudsters may use tumblers, they may use mixers, they may use unhosted wallets or exchanges that do not require KYC in an effort to obfuscate their involvement in the activity. So it is very important to act quickly. Um, I want to mention recovery scams, right? Because if we get to this point and you're seeking services to recover the funds, there may be a possibility you may come across a company that's fraudulent that may steal your funds and you're trying to get them to recover your funds. So that is a real possibility, and so many persons have been affected by it. So it's important to act quickly.
So could the losses be recovered if they act quickly, or is it a high or low possibility that it's not?
Again, it's dependent upon the level of sophistication. But
Okay.
if you should act quickly and try to recover.
And when they're acting, who should they contact? Do they go first to the police or the agency?
Well,
Or is it depends on what type of
yeah.
action?
So, for instance, like credit card frauds, where somebody has stealing your credit card information or whatever. I know the bank have certain control measures, so you could lodge a complaint with the bank, and they too will do their investigation. And most of the time, if they could prove that you did not use the funds, they'll reimburse you. But that could run side by side with a police investigation. But what you find most of the time that the perpetrators are not even here; they are elsewhere. So which prove a little bit more difficult.
So in cases where if you get caught up, say for instance, in one of those email scams, do they still take the recourse first action of going to the police, and then perhaps they would make then the agency involved?
Well, regarding to the agency, right? The name says Financial Investigation Agency. And as I said initially, we do a dual role where we almost like a supportive agent. So it can be reported, but once it's reported, the police will conduct the investigation, right? And then if, based on our reach, we could, via our secure portal, we could facilitate getting the information from overseas territories on behalf of the police. And we also have an outreach obligation to inform the public out there. So in this capacity, it would be more of a supportive role than an actual investigative role.
Investigation. I'll leave my other question for when it's other question and answers, because someone has asked me a question to hopefully air here today. But Carlton, now on the regulatory side of things, now I know you are privy to seeing some cases and some situations where persons in the territory are affected by some of the different fraudulent acts that are taking place. Now, what can you tell us about these particular actions, about persons being mindful and getting the right advice with their financial transactions that they do?
I think one of the main things, let me step back a little bit in terms of, and I'm enjoying the information coming forth from members of the FIA. Authorization. understand. Is it on? It's on? Okay, so it's important to understand that we're dealing with licensed entities here. So, sometimes a lot of the scams are outside of our scope. They're not licensed by the FSC. So it's important when you're getting into business that you do some research on the companies and make sure that they're actually licensed. Most companies would display it on their websites, or you can go on the FSC website and see, hey, is this company actually licensed? Because what you have is sometimes people get caught up in companies that are not even licensed, and then they might come to the FSC trying to seek recourse. So it's important before you get into business that you understand and you establish that this is a legitimate company and that they're regulated by us. So a few other things that I've seen, I hope I can share some practical, because frustration is not fraud. And you deal with a lot of that. You got people that are frustrated and they would say that it's fraud. And understand understand that the licensee as well, even though we want to make sure we protect the consumer as well, you want to make sure the licensee is protected as well too, because the consumer can commit fraud against the licensee as well. You have insurance fraud, and if you don't be fair in how you look at it, we're here to objectively investigate complaints according to the various legislations, not to particularly go on anybody's side. That's why I said frustration is not fraud. So a lot of times it's frustration. So one of the instances I think would be very vital, especially for investors, is that when you have legitimate businesses, some of the bigger companies that can have significant returns, and their history. Now the fraudsters now, they're gonna try to duplicate that. So one of the things you can have is duplicate websites. And that's a very dangerous one. So I think even how we as consumers think about business, we need to change how we think about that. So for example, you need to now have a greater understanding of cybersecurity. You can't just be somebody that goes and invests and think that, okay, I read a few books or I know enough, I can go. You need to understand about cybersecurity, because there's these different things, and I know the cybersecurity experts would be able to explain more, but in investigating the complaints, you can't help but research these things as well during that process. So even when you click on a website, there's certain triggers that show you whether it's legitimate or not. You can do searches in the search engines to see if it has been duplicated. You got to pay attention to those things, because in a case like that, those are very difficult from a regulatory side. I mean, licensees have reporting obligations in which if it's discovered that they were hacked or if there was a duplicate, they would report it to us. And we're happy to say that has pretty much been under control in terms of that. But as a consumer, you're exposed when you have a lack of knowledge of these various cybersecurity key points that you need to retain. Another one real quickly is when you have your devices, it's important because you protect them, because fraudsters can do transactions from your device and you're seeing that the money is gone. And your first reaction is, well, the licensee owes me my money. But the licensee, when they come on, they have to provide various information about their business models, even to be authorized to do business. So they pretty much have the required softwares and things to check to make sure that the login actually came from your device. So let's say you had your personal device, and it's a device that your family has access to, and they go searching all types of websites, and you have nowadays we're very, I don't want to say lazy, but we love the convenience of technology where you can use your face scans or you can leave it logged in. Those sometimes become very dangerous, because if you have your device and it's logged in, and your other people are searching websites they shouldn't be searching, and fraudsters gain access, they could do transactions legitimately, I say that, through your device. And then it registered with the licensee as a legitimate transaction from you. And then you would come to us and complain and say, well, my money was missing. But then when you investigate, you actually see that the consumer was the one that actually allowed that. So it's very important that we become more educated, especially about cybersecurity. And that's one of the constant things that we see, because understand that the licensees, they go through a vigorous process just to do business. So it's not going to be that easy to just, commit fraud like that, because to be onboarded, they had to come on, going through a process and providing the commission with different information. So now as a consumer, you have to be more aware of exactly what you're getting into.
So particularly as we're all hearing that there's so many ways between, that is the phishing emails, this kind, that cybersecurity is one of them, particularly because we all in the social age where a lot of our devices are being used. Is there any particular measures that you have advice or information you can say that here in this particular forum about what is being done to protect persons, or in order to say the companies, to help combat fraud?
Yeah, I think having that two-prong approach instead of thinking it's just about investment. There are a lot of free courses out there. You don't have to pay a lot for a free course in introduction to cybersecurity, or just the basics about understanding that. That's a way you could safeguard. I know from a regulatory perspective, we require cyber security. We have cyber security requirements for licensees. So in the background, they're always doing their best to upgrade their cyber systems and their frameworks and prove to us that they can withstand if there was any breach or protect against hackers.
And I think this goes along with too, as far as how the territorial impact on how we as you as the regulators are putting actions, or actions being put in place to help curb the fraudsters. As far as, I don't want to spill the beans, but we all know that the mutual evaluation is out there. So it's a territorial thing where we all have to now think about the AML impacts of fraudsters and how it impacts the territory on a whole, as to how well are we putting measures in place to ensure that we help combat crimes within not just the licensees, but also persons in the community, so that our credibility as a territory is sound and good. Do you want to expound on anything more about that to the audience?
Yeah, I think it's very important. You don't want a case where you want a case where people in a country could feel safe in investing and growing their money. You don't want a case where people are constantly in fear of doing that, or even when they do it, they would lose their money. It would not reflect good on the overall economy. You want it to be able to do that. And also, we're part of a global community. So we have to make sure that we're implementing the standards that are globally accepted as the regulators. So we really look to be in sync with the global levels and standards, so that truly we can be an area where we are doing our regulatory responsibility. I think just from a character perspective, investment is often attractive. Just generally, it's attractive. If you need money quickly, you think it's that. But I think too, people need to really take advantage. I'm not going to say any particular service providers, but I'll say they need to take advantage of the service providers that are out there, because they know better than us. And a lot of times, it's a lot of do-it-yourself that get you in trouble. Not saying that do-it-yourself is wrong, but that's why they're licensed companies, they're experts in their field, and they pay the relevant fees. Sometimes we take shortcuts, and then unfortunately we try to blame others for that. That's the reality. And so just from a standpoint of understanding, ourselves as a citizen, and to know where we stand, and it's okay to invest, it's okay to increase, but you got to do it from a consciousness that you're part of a bigger ecosystem of fellow citizens, as well as providers and regulators and law enforcement officials overall, for a country rating in terms of our position in the global economy of things in financial services and products.
Now I'll open the floor for questions. Should anyone have any questions before we close out? If you're shy, you can write your questions down and we can read them for you.
Mr. O'Neill, my question is, on a part where your device will open up and for us to get access to it, and everyone thinks it was you that was doing the actual transaction, what's the recourse?
In that case,
Yeah.
that now becomes, as Mr. Lorak was saying, that becomes a police investigation. So you definitely report it to us as the Financial Services Commission and we investigate. But also you need to, because now it is potentially theft, which now is a criminal act. You need to also report it to the police. So many times they're concurrent, they're simultaneous investigations being performed. So we're investigating from the regulatory side, and then the police would be investigating from the criminal side of that particular thing.
Okay. Secondly, you give your device to be fixed. Say, for instance, your laptop and your email was open, and they got in through your email that way. So now your emails are now channeling somewhere else, and you're thinking that, and it's coming to you too, and things happen that way. How do one?
Very important. I like your questions because it's actually diving into real life situations. So you see how much more aware you have to be as a consumer that it doesn't rest on the regulators per se, but the consumer has their responsibility. So in a case like that, potentially whoever it was, you're saying it was rerouted based on maybe the person who was fixing it. They might have been the one to commit the fraud. That's why it's important to report it to the police, because then now they would be outside of our scope because we're dealing with the licensees.
Okay.
So they would be outside of our scope. So it's important to know that it should be reported to the two entities.
Okay. Thank you.
No other questions from the floor? It's a quiet group. Well, I would like to say this concludes our session for today. And we hope that we have imparted enough knowledge to leave you feeling wiser and empowered to make smart investment decisions for your future. We couldn't have done this here today without the help of our panelists, which I'm gratefully thankful for, the staff that has supported us, as well as our tech crews and you, of course, the audience. And again, I would like to say thank you all and enjoy the rest of your day.
Hi, we do have a question.
Inquiring minds want to know. Yes, but you can use your mic. VIDI, Virgin Islands Depository Insurance. Does FIA or FSC play any role in that? If yes, can you tell us more? Virgin Islands Depository Insurance. Does FIA or FSC, Carlton, play any role in that? If yes, can you tell us more?
Insurance.
There might be some foul frustration, fraud, all of the above. Does FSC play a role or not? Okay. The mic is on.
That's what we needed. Process. I wouldn't even. I think it's just that question, but actually have to do it differently. You have to speak to this one.
Are you saying that if this is a startup institution, you're suggesting that we pay no attention to it?
No, that's not what I'm saying.
We can't hear you.
Oh, no. What I'm saying is that in terms of, you would have